Hello, everyone. We're just going to wait a couple minutes so that everybody can get on. Okay, good morning, everyone. We just have a couple people getting on still. We're going to give it a minute or two, and then we'll get started.
Okay.
Okay, thank you so much for joining us today for our event, Remote Auditing and CARES Act Concerns for Nonprofits. We are so excited to have you on with us today. This webinar is presented by Smith Marion and Company. We're a local accounting firm. We're in Redlands, California, and we have an office in Lake Arrowhead and also one in Brentwood, Tennessee. But we travel all over the United States and also out of the country to go on audits and work with clients. Before I introduce our speakers, I want to go over a couple housekeeping items. You'll see at the very top of your screen, there's a Q&A. You can feel free, enter questions in the Q&A, and I'll pause the speakers if it's relevant to what they're talking about. Otherwise, I'll save the question till the end, and we'll get through as many questions as possible. So feel free, submit as many questions as you want. There will be polls that'll pop up on your screen, and you'll be able to answer them. And we are recording this, so afterwards you can share the webinar with your colleagues, or you can rewatch it, and we'll send you the slide deck. So today we have Kendra Dockham. She's an audit principal and CPA. She specializes in nonprofit audits and works closely with nonprofits of various sizes. Kendra's on the board of Susan G. Komen in the Inland Empire, and she loves vacationing with her family in Pismo Beach. I'm Hannah Baldwin. I'm the HR director at Smith Marion, and I'll be the facilitator today. And we have Carlos Carrazzo. He is our tax supervisor and EA, and soon to be CPA. He's passed all 4 parts of the exam and is now just eagerly awaiting his license. He is very knowledgeable about the 990 tax return and works on individual returns as well. He's on the board of his HOA, is a soon-to-be dad, and has 3 dogs. And we have Nikki Matthews. She's a tax manager and CRTP. She's been with the firm for a very long time and is very knowledgeable in individual tax returns, bookkeeping, and payroll. She's a grandma to 2 very cute children, and she loves gardening and canoeing in Lake Arrowhead. And we have Crystal Conrad. She's the audit coordinator. If you're one of our audit clients, you've probably spoken to her before. She works very closely with the clients. She's a mom to 2 little girls, and she loves sewing in her spare time. So I'm going to pass it off to Kendra. She's going to be our first speaker. She's going to talk about what a remote audit looks like.
Thank you, Hannah. Good morning to everybody. Thank you for joining us. So the pandemic and the CARES Act has created a lot of new challenges and questions for all of us, and hopefully the information we provide here today will help answer some of those questions and alleviate some of the stress you might have in preparing for your upcoming audit. So since March, we have been working remotely. We've been conducting remote audits. And so we thought it would be helpful for those of you preparing for your upcoming audit if we kind of talked about what is the remote audit, what it'll look like. So The remote audit is one that's conducted partially or completely offsite. It'll cover all the same areas that we normally cover during an audit. We'll meet all the same standards that we normally meet. Our remote will typically be for the same duration as an on-site audit. So we had a polling question, Hannah.
Let me launch that really fast. Okay, now you guys can all answer the poll question and we'll just give it 30 seconds.
So remote auditing and the paperless audit, they're not new things to any of us. It's been around for some time. And so we were wondering how many of you would consider your office paperless? 50%, 75, completely?
And we'll just give this 10 more seconds for everybody to answer the question. And we'll close the polling.
Oh, so it looks like for about 25% of you, your office is not paperless at all. 25%, 39% say you're 25% paperless. It looks like 18% is 50% and 18% is 75% paperless, with nobody being completely paperless at this point. Obviously, when we're performing a remote audit, the more available the paperwork is digitally, whether you're in your office or at home, the more effective and efficient the remote audit is going to be. So as I was saying, our remote audit will typically cover the same duration as your on-site. We have reserved those times on our calendar. And so we will be working exclusively on your audit from our offices. And we just ask that you make sure that you're available during those scheduled days as well, just as you would if we were on site. And we're going to use a lot of technology as much as possible to support this process. Next slide. Some of the tools that we'll be using is, of course, a COVID survey. Some of you may have already received your COVID survey. If you've not, you will, if we'll be coming into your offices. So the COVID survey will just give us a chance to find out about your accommodations, your protocols, so that we can make sure our team is prepared to be in your offices. We're also using Zoom for a lot of this work. And we have another poll, Hannah.
Okay.
So I don't know how much you've been using Zoom. I think if I'd had a crystal ball, I would have bought stock in these sort of technologies about a year ago, and my portfolio would probably look a little better than it does now. But Zoom has become a really good tool for us. It still allows us to interact with our clients face-to-face without actually being in person.
Okay, we're just going to give it 15 more seconds. You can get your votes in.
I know that a lot of our clients, their entire day is filled with Zoom interviews. Even people who haven't used technology a lot of our volunteers and board members have become very familiar with this. So it looks like 66% of you are using Zoom or have used Zoom in this week. Hopefully you didn't count this instance. And it looks like nobody has never used Zoom. So that's awesome, really awesome for the remote audit. Being familiar with Zoom will make the remote audit go so much more efficiently for you. We can also use Zoom to share screens. So if we have some documents that we're looking at that we have questions about, we can share our screens, or you are able to share your screen so that we can see what you are looking at. Because all of the information that we'll be obtaining in the remote audit is digital, Additional confirmations or representations on your management representation letter may be required in order for us to complete the audit. And when we do come into your offices, it will be for the limited testing that we can only do in person. And so we'll send all of those selections to you ahead of time. We ask that you have all of your paperwork ready for us so we can make our time in your offices as quick as possible. So one of the other tools that we'll be using is the engagement organizer. And Crystal is going to walk us through the engagement organizer, how it works, what you can expect.
Hi, everyone. So I first wanted to start off with, this is the email that you'll get from the engagement organizer. And it's from, you can see up here, it says no reply at walterskluter.com. And so a lot of times this will get sent to your spam folder. So we also like to send an email from the firm that lets you know that we've sent this so you can look for it. And it gives you the link to open it up, and then it gives you your user ID. And then from there you can create your password.
Crystal, I believe you had a poll. Do you want me to launch that now?
Yes, yes.
Okay. And we'll just give it 15 more seconds. This is nice and easy to answer. Okay, I'm going to close the poll.
So it looks like just a little over half of you have already used the engagement organizer. And so that is fantastic. We feel it's a really great tool that is very helpful because it's like an electronic request list and you can see what you've uploaded and we can see what you've uploaded. Go ahead and go to the next slide, Hannah. Right, so we have a demo of how to use the engagement organizer, and it covers things like downloading and uploading and adding notes. Hannah, we can't hear the volume on the video.
You can't hear the volume?
No.
Okay. There we go. Just start.
I'm going to do a quick run through of our engagement organizer here. So when you log in, if you have just one job that you're working on with us, it'll take you usually right to this page. If you have multiple jobs that you're working on with us, you can go here to organizers and it'll let you choose between the different ones. So it's the same login no matter how many that you have that you're working on. I just have the one, so I'm going to go into it here. You can see up here in the top corner, it has the client users. So if you have multiple client users, they'll show up here. So if you need us to give access, let's say to an outside bookkeeper or a payroll, somebody who does your payroll, or any of your staff that you want to be able to put these documents in for you, just let us know and we can add them up there. Here's the due date for the binder. Hello, I'm going to do a quick run through of our engagement organizer here. So when you log in, if you have just one job that you're working on with us, it'll take you usually right to this page. If you have multiple jobs that you're working on with us, you can go here to organizers and it'll let you choose between the different ones. So it's the same login no matter how many that you have that you're working on. I just have the one, so I'm going to go into it here. You can see up here in the top corner, it has the client users. So if you have multiple client users, they'll show up here. So if you need us to give access, let's say to an outside bookkeeper or a payroll, somebody who does your payroll, or any of your staff that you want to be able to put these documents in for you, just let us know and we can add them up there. Here's the due date for the binder. This is the date that we would like all of these items uploaded. Usually the due date is about 2 weeks before your fieldwork date if we're coming out for fieldwork, or if we end up doing the virtual fieldwork where we're not actually coming out, but we have dates set aside to specifically work with you on your job. We will have that date about 2 weeks before. Sometimes we do have the due date set a little sooner. Usually you'll see here with this trial balance and general ledger that it will have a due date here that is before this date, because we need this to pull the samples and everything and get that to you in enough time. Right here, there are notes. You can leave notes. So this note I left says QuickBooks Online access given to Crystal, because I have QuickBooks Online and I don't have the trial balance or general ledger to upload. To leave a note, you just click these 3 little dots here and click add a note. If there is an item that is not applicable, you can mark it as not applicable if you'd like, or you could just leave a note right here and let us know, we don't have, let's say if we're asking for credit card receipt or credit card statements, you could just let us know, I don't have credit card statements for this year. Or you can mark it as not applicable. If you want to, we have some items here that we have uploaded for you. Your engagement letter, contact sheet, and a couple other documents if we're doing an audit for you to fill out and give back to us. So in order to download these, you can click on this button here and it will download it. You can also click download here, but this will download all the attachments in the whole organizer. So if you've already started uploading, you're going to download everything that you uploaded as well. And then this file is a compressed folder, so you can extract it and then put it where you need it. So I would open it up, fill it out, and then I want to attach it back. So there's 2 ways you can do it. You're going to click on this 3 little dots and click Manage Attachments. You can either drag and drop the files into here, or you can browse. Either way, so we'll drag it here, and then you just click this Upload button. You can also, if you need to put multiple files in, you can go in here and pick multiple files. Just make sure that you click the Upload button so that they actually get uploaded into the organizer here. And then you can close out of that. Once you're done uploading for the day or that specific group of items and you're finished for a while, you can click this Send button up here. Now this Send button will let us know, hey, the client has uploaded information into the binder so that we can go and look. It's instantly available to us when you put it in here, but it doesn't notify us if you don't click the Send button. So you want to make sure that when you're done uploading that you click Send, but it is not necessary to do it after each item. And that is our engagement organizer. You can see there's lots of different items that we'll request, and they're in different sections to kind of help you out there. One thing, it does sometimes send you verification codes to get logged in, and those go to your email. And sometimes they do take a couple minutes. So you kind of have to be patient and wait for them. The first time that you log in, when you create your password, it will ask you for you'll have to get a verification code. And then once you create the password, then it will ask you for another verification code to get logged in. So it does ask you twice that first time, but after that, it should only ask you once. And if you have any questions, feel free to contact me, and I can help walk you through it or answer any additional.
It looks like we have a question. Are we using DocuSign for engagement letters? Crystal.
I know the Tennessee office is using, I believe it's Right Signature, and they are sending engagement letters that way. We usually just attach a PDF here in the Redlands office, and then you can sign it and scan it back to us. But if that is preferred, we do have access to that and can send it that way if requested.
Great, thank you. I'm going to go to your next slide.
So what will be in the organizer? If you're an auditor or review client, it will be those requests. If we do your tax return, it'll have those requests in it as well. But we do have some bookkeeping clients that we're using the organizer for as well. So Just kind of depends on what we're doing for you, but all of those requests should be in there for you. And then here is just kind of a recap on how to upload the document. So you first click on those three little dots. The second, you'll click on Manage Attachments. Third, you'll either drag and drop the files or browse. And then you'll click Upload. And then lastly, you'll click that Send button. And if you have any questions or need help using it, we do have Zoom. So I am able, you can share your screen with me and I can help you, or I can call you and walk you through it if you have any issues with it. And then we're back to Kendra for a little bit about any of the deadlines and extensions.
So in response to the pandemic and the requirement for a lot of us to work at home, the OMB did issue administrative relief for recipients of federal grants. The first memo that they put out in March of 2020 gave everybody a 6-month blanket extension on their single audit for year ends through June 30 of 2020. However, that particular memo expired in June of 2020. And so OMB put out another memo. It's memo 20-26. It is in effect through September 30 of 2020. And the new memo altered that blanket 6-month extension. What it did was it gave recipients and sub-recipients who would have a normal reporting date from 3/30/2020 through 6/30/2020, an additional 6 months to complete and submit their single audit. And then instead of 6 months for through the end of 6/30/2020 year ends, they changed it to those entities with a normal due date in between July 31st, 2020 and September 30, 2020, an extension of 3 months. Unfortunately, memo M20-26 removed all extension for year ends 6/30/2020. So those of you with a single audit requirement with a year end of 6/30/2020, you will still have to have your single audit completed and submitted by 3/31 of 2021. And now Carlos.
Hi, everybody. One other note from that was on the 990 extensions. So if you're a June 30 year-end client, the extra time that was given to clients that had fiscal year ends before 12/31/19, that has been lifted as of right now. So it's back onto the normal time frame. So if you're a 6/30 year end, your return will be due initially 11/15/20. Otherwise, it'll be extended out to May 15th, 2021. For some PPP loan information. So when it comes to the forgiveness application, the final guidance is not yet available. They have produced a form as lately as I believe June 24th. And we are currently advising clients, just hold off because, it's not final yet. There's still things coming through the grapevine. Currently, there's a development possibly of exempting applications for people under 150K, but that's not a for sure thing yet. And there is no set timeline on when this is to be finalized. It would be really great to have this before Christmas, but we're just not sure yet. When it comes for the time that you have to expend the PPP funds, that has been extended out to 24 weeks. So that's 6 months from the date that it was deposited into your bank account. So what I mean by that is if it was deposited May 1st, you get 6 months from then. So that'd be around November. And with that extra time, we are advising that you don't rush to apply for forgiveness because things could change between now and then. But one thing you can do is get your documents ready and start maintaining certain items. So the last bullet point there for FTE, that stands for full-time equivalency. And this is measured on 2 different bases. One is an actual base and one is a rounding base. So on the actual base, a FTE of 1 is equal to 40 hours per week. And if you work over 40 hours, it's worth 1. If you work 30 hours, that would be a 0.75. So that's the actual method. The rounding method is everything over 40 is worth 1, and everything under 40 is worth 0.5. It is up to the organization to pick whichever method they want. And obviously we would want to pick the one that is most advantageous. Now, whichever one you pick, you have to apply to the covered period and the actual period. So the actual period is when you're expending your funds. So that's right now. The covered period is what they use as like a standard to measure to make sure you maintain the same level of employment. So there's three different covered periods. If you're a seasonal employer, you have the pick of the litter. So you can pick between the other two that I'm about to mention, or you can pick any 12-week period between May 1st, 2019 and September 15th, 2019. So that's the outlier period. The other two main periods are to pick any 12-week period between February 15th, 2019 and June 30th, 2019. The other choice you have is the entire period between January 1st, 2020 and February 29th, 2020. Now, whichever covered period you pick as your standard of measurement, you want the one that gives you the lowest FTE figure, because that's what you have to match right now between your 8 or 24-week period of expending the funds. And then let's go to the next slide. All right, so while you're maintaining that in the back of your mind, making sure your FTEs are there, you still have to account for the funds themselves. So there's two main ways to account for them. The blanket way for essentially every organization is to treat them as debt. So you're gonna create a loan account on the books, and it's gonna stay there essentially until the revenue is recognized when it is wholly or partially forgiven. So that's when you do the application. Now, during this period, you're going to accrue interest at the rate that the loan designates, but you're not going to impute a market rate of interest. So that's for essentially everyone. Now, the FASB has released more guidance for not-for-profits. So if you're a not-for-profit organization and you believe that your eligibility criteria means that you will be completely forgiven, you have the ability to count this as a conditional contribution instead of a loan. So again, you have to assume that this is going to be 100% forgiven. In order to be 100% forgiven, you have to expend the amount of funds you have. So if you got a loan for $100,000, you have to expend that through payroll, rent, utilities, and a couple other allowed ways. And you have to maintain your full-time equivalencies with the actual period versus the covered period. So if you, as a nonprofit, believe you can do both of those, it will be a conditional contribution. It'll essentially be a donation with a time restriction. And that allows you to book it as revenue at the point of receipt instead of treating it as debt and not recognize the revenue until it is forgiven. Let's go on to the next slide. For any of our single audit filers, there is a little bit of news that will help you. So even though these are federal funds, these are completely federal funds, they have a CFDA number, they will not be included on your CFA, so you don't have to report it there. Now, the caveat that goes along with that is, if these funds that are being given to you by the PPP loan are, the wages, the rent, and the utilities, if they're used for the forgiveness of the loan, they cannot be charged to a grant. So you can't use them for both. So you don't have to report them on your CFA, but you can't use them as a grant expenditure if you're using them for loan forgiveness. So that's something to keep in mind when you're running your budgets. Now that we're done through the PPP loans, Nikki is going to walk us through employer payroll tax credits.
Oh, looks like you're muted, Nikki.
That's always my problem. Hi, I'm Nikki. I work out of the Lake Arrowhead office of Smith, Marion & Company. And We do a lot of payrolls for small businesses up here. So today I'm going to be talking about a couple of new COVID-19 related employer payroll tax credits, and then also I'm going to touch a little bit on a payroll tax payment deferral that's being offered. Generally, just about every business has been affected by COVID-19. Unfortunately, 2020 is really an awkward year for both employers and employees, and the economic impact has been pretty tough. The federal government has stepped up in so many ways to try to alleviate some of that stress. So the credits that I'm going to talk about, again, benefit both employer and employee in some unique ways. The first one that I will be talking about in the slides that follow is a federal, besides that, a federal payroll tax deferral provision that can delay payment of your employer share of the Social Security tax. That's the 6.2% that employers kick in for their employees for up to 2 years, which the idea is hopefully that's when your business will be more solvent and your cash flow will be a little bit more secure. So next slide, please, Hannah. Alrighty, so the first one I'm going to talk about is the Employee Retention Credit. This is an employer credit instituted under the CARES Act, and to qualify, there are 2 conditions that need to be met. The first one is that the employer's business is either fully or partially suspended by government order due to COVID-19. And I know that's a really across the board problem with so many businesses that have been told to shut down, movie theaters, restaurants, and I know a lot of nonprofits have situations where they may operate preschools, thrift stores, all kinds of things that for periods of time were told to close their doors. The second way to qualify for this credit is to have a significant decline in your gross receipts, even though you have not been closed. And a significant decline is described as this. It begins with the first calendar quarter in 2020 in which your gross receipts are less than 50% compared to the same period last year. So last year, if second quarter's receipts were $100,000, this year they would have to be $50,000 or 50% in order for you to qualify for this employee retention credit. That period ends then when your gross receipts become at least 80% or more than they were last year in 2019. Next slide, please. So this is a differentiation between types of employers. There are generally 2 sizes of employers. Employers with more than 100 full-time people and employers with less than 100 full-time employees. FT I've used to abbreviate for full-time. In general, this credit is 50% credit up to $10,000 in wages paid to each employee for the period that runs through 12/31/20. So obviously that's pretty simple math. If you use this credit to pay $10,000 wages to an employee, the government will give you back 50% of that, or $5,000. And that's a very generous offer, I think, especially when you look at the 2 types of employers that we just mentioned. The first one is a little bit tougher. It's for employers with more than 100 full-time employees during 2019, during the period that we're looking at. So let's just say we're focusing on second quarter. If you had over 100 full-time employees last year at this time, then you can only use this credit for wages that are paid, and this always includes the qualified health plan expenses paid or incurred for those same wages. But here's the trick. It's only paid to employees for the time that they're not working. So your employees have to have been essentially laid off or furloughed for this period, and you have chosen to keep them on the payroll. You can pay them up to $10,000, again, for not working, and get $5,000 back from the federal government. So that sounds like some people might say, well, wow, I just had to kick out $5,000 to somebody that's not even showing up because I don't have work for them right now. We've been cut back, or we've been closed by the government. But remember, these are your employees, and sometimes these are very valuable people that otherwise are hurting and may leave you, may end up going to some other job, people that you've trained, relied on, and have been loyal to you. So the second situation that I'm going to talk about are for employers with 100 or less full-time employees last year during the same calendar quarter as this year. This one is much more generous. You can count wages paid to all employees and their health plan expenses that you're also paying. And these wages qualify even if the employees are still working for you. So they're doing their job, but this credit allows you to pay them because you would be anyway. They're doing services for you, and then you can apply for a 50% credit against those up to $10,000 in wages that you paid them. So in essence, I just want to recap, that's very significant. Up to $10,000 paid to each employee will generate a credit of $5,000 refundable back to the employer. And the employee has received $10,000 in wages. It's no different to him. He still gets it on a regular paycheck, while the employer has only spent $5,000 of its own money. And in the next slide, I'm going to go over how that works. So as I said, this is a refundable tax credit. It is first applied against your employer FICA taxes as reported on the Form 941. It applies to wages beginning on March 13th, and this credit expires on December 31st of this year. It is a 50% credit, as we talked about, up to $10,000 in wages paid to each employee, which translates to a $5,000 refundable credit back into the employer's pocket. The amount of wages taken into account can include the employer's expense for maintaining and providing a group health plan applicable to those wages. And in case you're wondering what are qualified wages, those are just the wages that you pay that are subject to Social Security and Medicare taxes during this period, March 13th through December 31st of 2020. Next slide, please. So the refundable portion is allowed after the employer share of Social Security tax on Form 941 has been reduced to zero by either this credit or the other credits that we're going to talk about after this particular one here. You would report the refundable portion of that employee retention credit on line 13D of your Form 941. And also in a later slide, I'm going to talk about how Form 941 has expanded to be 3 pages long. They added an entire page to accommodate these credits and to reconcile them. And if you cannot wait for your 941 to be filed and show that you owe less taxes, or obviously you could reduce your payroll tax deposits throughout the quarter, there's a Form 7200 that you can request an advance payment of the remaining tax credits that have not been refundable or been able to be reduced by the Social Security tax on the 941. And you can file that Form 7200. It's easy to find on irs.gov or just Google it to see what it looks like. But it allows an advance payment of those credits that you anticipate for the quarter at any time before the end of the month. And you can file this Form 7200 several times during the quarter if you're really hurting on cash flow. Next slide, please. The other significant COVID-19 related employer payroll tax credit under the CARES Act is actually two-part. The first one is instituted under the Emergency Paid Sick Leave Act, and its companion is the Emergency Family and Medical Leave Expansion Act. Next slide, please. So for an employer to be eligible, there's a couple situations that have to be met. For COVID-related pay leave wages from April 1st, and again, all of these different credits seem to have different start dates. They generally end at the end of the year. But this one, it has to be the wages paid beginning, time worked beginning April 1st, And it is for employers with only less than 500 employees. Large employers cannot use this particular credit. The employer must keep the doors open, even if they have stay-at-home orders in your community, or if you've been told that you have to suspend business. Keep someone working, keep someone in the office, running payroll, answering phones, whatever it is. Don't lay off your employees. The reason is because if you lay off your employees, then they can't take paid sick leave because they weren't working anyway. And if there's no work available to your employers, then they'll have to apply for UI benefits, unemployment benefits with their state. Next slide, please. So as we said, this is a two-prong credit, and the first section is called the paid sick leave credit, and the second section is the paid family leave credit. That part's very unique, but I'm going to go over the paid sick leave credit first. In order for an employee to be eligible, they cannot work for one of these three reasons, including they cannot telework. So many people have now been finding out that they can only work from home because their storefront or their offices have been closed, but they can telework, and that's been a valuable experiment, I think, because a lot of people have learned that can be efficient. But the employee must not be able to work or telework due to the following reasons. Reason 1 and 2 are both paid under the paid sick leave credit, but between them they're unique as well. Self-care. This is item 1 under the sick and family leave credit. The employee has to care for themselves because they have been either diagnosed with COVID symptoms, they're subject to a quarantine, they're told that they have to stay home because of a general quarantine in their household. They are allowed 2 weeks of wages under this credit at full pay, not to exceed $511 a day. And that is paid directly, primarily by the employer. But the great part of this credit will follow in a slide after this one, that the employer doesn't actually end up having to pay it. Item 2 is also under the paid sick leave credit, and I call that one other care, because that is a situation where the employee cannot come to work because they're taking care of a family member. And that may be a family member who's under quarantine at home. It's a child that you have to take care of because their school or child care facility has been closed due to COVID-19. It's other care, but it's related to not being able to come to work. And that one is only good for 2/3 of your wage. It's still good for 2 weeks, but you don't get paid your full amount if you're caring for someone besides yourself. And that's up to $200 a day. So if you normally get paid $21 an hour, you would get paid at $14 an hour, 2/3 for 2 weeks, paid by your employer. It looks like a regular paycheck, except when it comes to the employer's credit, which we will talk about in a minute. The third prong of this is the paid family leave credit. This one is very unique because first, the employee needs to take advantage of either number 1 or number 2. They have to go out on 2 weeks of paid leave for either of those situations, probably if they're taking care of the child because their child's child care provider had closed doors, they would take the 2 weeks of item 2, other care, at 2/3 pay. And after those 2 weeks, they get an additional 10 weeks. So we're talking a total of 12 weeks, only if you're taking care of your child at home because the child care provider was closed or the school was closed. And again, for both 2 and 3, you are limited at 2/3 of your pay, but that's money that you wouldn't have gotten before because you would have been out on your employer's sick pay. So I'm pretty impressed by that particular credit. Hannah, can we go to the next slide, please? So here's what I think is an amazing feature. How does the credit get paid back to the employer? We just talked about how the employee gets a check for either 2 weeks, or if you're taking care of your child at home, for up to 12 weeks, 3 months, how does the employer end up getting made whole on this? So what happens is that you take of these ticked off items, you're going to take all the money, the gross wages that you paid to your employee for the sick leave wages and or those additional 10 weeks of family leave wages. You're going to add in the employer share of FICA. So now we've got 100% gross wages plus 6.2% of FICA and another 1.45% of the Medicare tax. And if you paid for health insurance during that period, you add all those together, which could be a significant number, and you're going to deduct that from your next federal payroll tax liability. When you pay EFTPS, you get to knock that off, and that could truly wipe out whatever your next payroll tax liability is. And we'll talk about what happens if it does wipe it out. How do you get the rest back in your check after in your pocket after you filed your 941. So actually, let's stay on that slide here. I thought I'd go to the next one. But I just want to emphasize that this credit, it benefits employees because they're getting, especially with staying home and taking care of their kids, they're getting paid by their employer, and it'll show up on their W-2 as wages. But the employer is just acting as a conduit to get the relief to the employees by keeping them paid, and the employer is very quickly reimbursed because they get to deduct all of those 4 bullet points there from their next federal payroll tax payment. And lastly then, go to the next slide, please.
I have a quick question that popped up, Nikki.
Oh, yes.
So someone's wanting to know if an employee is over 65 and is afraid of getting COVID, then they want to quarantine, do they fall under number 1?
You know, I have been asked that before. I don't have any direct information on that, but I think that if they're in a group that is vulnerable and susceptible because either they have a diminished immune system, they've just been getting out of having some other disease, they had cancer treatment, or they're over 65, I think that that would be a bona fide reason to request this pay, because you're self-quarantining. And it wouldn't hurt to actually go to the doctor and get a note from the doctor. From what I've been reading, the guidance is that you do not have to prove that to the IRS. They're going to be overwhelmed already. But the employee should bring in to the employer a short note, and the employer may even want to make a form that's consistent between all employees that may take advantage of this credit, with their name, the dates that they're going to be out, the reason that they're out, and keep that on file in the employee's records. But over 65 and you're worried that you're vulnerable, yes, I think that that would qualify for number 1, self-care. Again, it's only 2 weeks, so they're not milking the system if they truly are worried.
Thanks, Nikki.
So this is the last section that I am talking about. This one I would suggest people take with caution if you do decide to use it. It's an allowed deferral of the payment of the employer's share of Social Security tax. This is just 6.2% that the employer normally would pay. And it applies towards deposits that would be made for the period. Again, here they've changed the dates on us. This one starts March 27th. So any payroll tax payments due from March 27th through the end of the year can be deferred until December 31st, 2021 and December 31st, 2022. And the way that's supposed to work is that you can hold it back. You mention it in a line on the new page of the 941 that you're deferring that. Half of what was owed will be due by December 31st, 2021. That's a year and a half from now. The remaining half of the original liability will be due by December 31st, 2022. And of course, the idea is that you will be a little more cash flow healthy at that point. But my concern is that you're going to be surprised suddenly when you realize that you've held that back and now you're going to owe many thousands more at the end of December 2021 and December 22 than you normally would. So go into that cautiously. And that is all that I have to offer, Hannah.
Great, thank you so much, Nikki. Let's see, I have some questions that have popped up throughout the presentation. I think this one's for Carlos. Our full-time is 35 hours and everything after that's part-time. Should we count staff as half a full-time employee for the sake of the PPP?
Okay, so Jesse, in your guys' particular case, it is just going to be completely easy to use the rounding method, which is everyone under 40 hours is 0.5. For this particular part, for PPP loan forgiveness, there is no detriment to doing that. But as Nikki covered in some of her slides, the full-time requirement for some of those credits is set at a particular hour possibly, not at what you guys consider full-time. So for PPP loan, I suggest that you guys use rounding just to make it easy. Otherwise, you're gonna have to calculate some people at different decimal points. So in your guys' case, if you had the same amount of employees during your actual period versus your covered period, you're set for FTE, and you guys are good to go.
And then another question that came up was for Nikki about the revenue loss. So Nikki, when it comes to calculating revenue loss, does that include loss of revenue from fundraising events?
I have not seen any distinction. It would be, and that's a big one for nonprofits. So I would say that would definitely qualify as revenue loss.
Okay, great. Thank you so much. I have a couple more questions. If anybody else has any questions about the presentation, feel free to enter them into the Q&A. One of the questions we got was, if my business received a Paycheck Protection Program loan, can we still take the employee retention credit? That's for Nikki.
That one's for me. No, you can't. That's pretty much double dipping, and that's specifically not allowed.
And then what about if an employee didn't know about the credits when they needed them? Can they retroactively receive paid sick leave and expanded family and medical leave requirements?
I wish that was true, but no, you cannot. It cannot be retroactive. It has to be taken in the current period.
What about if an employee has to take care of her daughter and can work from home, but isn't able to work a full schedule? Can she get partial emergency family leave for the parts of the day she can't work?
Yes. It would be beneficial if you could make an arrangement with your employer to set up some sort of schedule, say that you could work for 4 hours, get paid for 4 hours as a regular wage, and then take 4 hours of the COVID-related childcare pay, the item 3 for the other 4 hours. But yes, that's definitely possible.
Okay, excellent. And then I think just one more question. Can the same wages for the employee retention credit apply for the sick leave and family leave credits?
No, has to be one or the other. Again, that would be double dipping.
Okay, great. I think that that's all the questions that we have. I don't see any more coming in. Again, this is all recorded, and everybody who attended will send you the slides in the slide deck. Thank you so much for attending. We really appreciate you all. And thanks to all the presenters. You guys did a fantastic job. Have a good day.